U.S. stocks experienced a little bit of a pullback here today. We were down around 1% on a lot of the different indices out there. Not entirely surprising given the fact that we've been up so significantly so far in 2019. It was worth noting that we did close well off of the lows of the session, so the bulls didn't want to completely just roll over, but nonetheless we'll want to keep our eye on that developing story. We did see a big merger in the banking space today with SunTrust and BB&T, so that was pretty interesting. I do want to focus on the consumer discretionary space in our trade application today from a company that reported earnings and had a nice little pop despite the market pullback today. So let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's February 7th, 2019. First of all, if you're new, welcome aboard. Go ahead and check out our description area on YouTube if you want to sign up for our email distribution list, which entitles you to not only be notified when these videos are posted, but also will let you see which stocks in the S&P 500 are giving you overbought and oversold cluster signals. In addition to that, we're heavy users of Twitter. Make sure you're following me there. It's at Brandon Van Zee is my handle, and we'd encourage you to click like and retweet if you do get value out of these daily videos. In addition to that, we also have a presence on Facebook. Feel free to check us out there at the group in the web address embedded in the logo in front of you. All right, let's go ahead and dive into the charts now. And as you can see, I've got chart 4B pulled up here in front of us. These are the four major U.S. equity indices, and these are 3-month charts. Now, as you can see, we did have pullbacks across the board here today, so we were down 0.94% on the S&P 500. That's about a 25-point pullback. We did have a slightly large, actually it was about in line with that. It was 0.87% on the Dow, so those two were fairly similar to one another. But the one that did pull back the most was down below here. This was the NASDAQ Composite. It was down over 1% here today, so maybe a little bit more significant there. Remember, the NASDAQ traditionally has a little bit more of your growth-oriented companies within it, so we do like to see that one outperform when we can get it if we're going to be bullish, and so that's a little bit more concerning to see that one down more than some of the more blue chip indices that I mentioned before. And then last but not least, we did have the Russell 2000 down 0.82% as well. But you will notice, kind of like I mentioned in the intro there, that if you look at the candle, so let me just use the S&P 500. So I'm going to right click on the chart and go over here to maximize sell. Notice on this candle, we did not close near the lows of the session. For those of you that are new to reading candlesticks, that would occur if we had kind of a, in fact, this would be a good example of one over here. On Christmas Eve, we saw price close basically at its low of the day. And so it's a big red filled in candle like that. When you have a candle that looks like this, it tells you that we traded as low as right there at about, let's call it 2,687 on the S&P 500, but we were able to rally a good 20 points or so off of the lows and finish at 2,706. So we'll have to see where that takes us. Some of you might identify that and say, that kind of looks like a hanging man candle, doesn't it? And it could. It's up there at an area where you might assume there could be some resistance, and that is where you want to find those. Remember, a hammer looks very similar to that, but a hammer is found at support. So when you see this looking candle up at an area like this where it's been struggling to break through, then perhaps that can be viewed as a bearish type of a setup. Of course, we'd have to wait until the next day to confirm whether that indeed was a hanging man or not. But nonetheless, we've got a little bit of a pullback. This is a 2-day pullback here, so we don't want to make too much of it. From a posture setting perspective, remember we use this green intermediate line on the market forecast to help us set our posture. And when we have that intermediate line in the upper reversal zone like we do right now, we do consider that to be strongly bullish intermediate term posture. Now, just because we have a strongly bullish intermediate posture doesn't mean that we expect the market to go straight up every single day for the next several months, right? There's always going to be pullbacks along the way, and perhaps right now is the start of one of those pullbacks, and we'll just have to see where it takes us. But right now, it's par for the course. We remain bullish. We still are above a rising moving average as well. As you can see there, the color of that moving average is green, signifying that price is above a rising moving average, and that's generally perceived bullishly as well. So from a intermediate term perspective, we remain bullish, but in the shorter term, it is a little bit of a loss of momentum that we're dealing with here in the last couple of days. So that could entirely persist here in the short term, and we'll just have to see what the news brings our way. I did notice that we had more earnings coming out after hours today. Chipotle, by the way, was up really big yesterday. Let me show you the chart of CMG here. Chipotle surprised a lot of folks here. They were up about $60 per share. That was good for about an 11% bump to the upside there. Twitter was one of the big down movers here today. You'll notice that Twitter reported their earnings, and they went the opposite direction of Chipotle. They were down about 10%. So just goes to remind you that during earnings season, there can be some big winners and some big losers as well. But this afternoon, after the market is closed here and within the last half an hour, a big toy company, Mattel, did come out with earnings, and that stock is now trading up about 20% after hours. Now, this is already a very low-price stock because it's really been in the doghouse over recent years. So it was only a $12 stock to begin with, but you can see that $12 stock has turned into about a $14 stock and change here after hours. So perhaps a little bit of positive price action there out of that consumer discretionary name. Let's get back on track with some of our charts. I want to take a look now at our 3 green arrows setup. This will be chart 4C. And as we pull this up here, a reminder of what the 3 green arrows is looking for. We're looking for 3 different technical indicators. The first of the arrows that we look at is going to be whether the price is above or below the 30-day moving average. And of course, that is the case with all 4 of our charts. Price is currently above the moving average in all 4 of those charts. The second of the 3 green arrows that we're looking for is the MACD histogram. And so you can see right here, as an example on the S&P 500, when that MACD bar is above that 0 line that you can kind of see me kind of moving my mouse through right there, that would be viewed as a green arrow. And you can actually see that green arrow came in way back here at the beginning of the year. Actually, it was the last day of last year. But we have had a green arrow on the MACD that entire time. Notice that we are awfully close to losing that particular green arrow on the S&P 500. So we'll keep our eye on that. You know, we did get really close to losing it right there as well, and then we kind of had a little bit of a Hail Mary and saw some more momentum come into the marketplace a few days after that. So we'll see if that can occur yet again here with the market, or whether the bears are going to take control a little bit more. And if the bears do take control for a longer period of time, you would anticipate that the third of the arrows that we look at, which is the stochastics down below, will start dropping out of that upper reversal zone. Now remember, on the stochastics, the upper reversal zone is 75. I always like to remind folks of that because stochastics is somewhat similar to the market forecast indicator that we were talking about a moment ago. But remember, the market forecast, its upper reversal zone is at 80, so the stochastics is at 75, so it would require a little bit more of a push down until you actually got that red arrow on the stochastics themselves. So at this current juncture, we continue to have 3 green arrows on all 4 of our charts, and that just goes to show that we have a slightly better trend trading environment, at least if you're a bullish trend trader that's out there. That reminds me, we had a question somewhat similar about that regarding, you know, taking bullish or bearish trades on trend trades in my question and answer class today. So if you want to hear my thoughts on that, feel free to check that out if you are a premium Market Scholar subscriber. In fact, here are some of the other questions I covered in my class today. We talked about Qualcomm from a dividend growth investing perspective. We talked about, you know, looking at stocks that have yields above 3%. We looked at some conversation about what makes an options price either expensive or not expensive. A little bit of a discussion on some scoring that you can apply from a fundamental perspective to stocks. We talked about Halliburton. We talked about Tapestry. We talked about looking for REITs that are not necessarily issuing additional shares. That's a kind of a difficult thing to find out, but if you want to hear my response on that, feel free to check out that particular Q&A session. We talk about the dividend aristocrat list. So here at the end of January, we did find out the new stocks that were added to the aristocrat list, including Caterpillar and United Technologies and a few others. We talk about how do we know when to buy back a call if our call gets kind of run over and the stock goes up a bunch. We talk about looking at JP Morgan as a dividend stock. Talked about some of those short funds like SH. We talked about what to do about put verticals that are going to expire in the money. And then we talked about Illinois Toolworks. So a lot of great content there to sink your teeth into. That recording is now posted. All right, let's get back on track here with some of our other charts. I'm going to take a look here at this point at chart 4D now. This is going to be our longer term chart. And this is going to look at 3 years of data rather than just 3 months. And what we're looking for here are moving average crossovers. And the orange line that you see on the charts is going to represent the 10-period exponential moving average. The blue line is going to represent the 40-period exponential moving average. The color background of the charts is going to signify whether we currently have a bullish or a bearish crossover. And so it is the case that in all 4 of our charts, we continue to have a bearish crossover. And that bearish crossover occurred basically end of November, beginning of December, that time period. But you will notice that in particular, the Dow Jones looks like it's really, really close. In fact, without being able to see it, up close and personal, it almost looks like it's already crossing over. It almost looks like the orange line is up and through that blue line. If I right-click on that chart and go to maximize sell, I might be able to see it a little bit better, and there you can see that separation a little bit more. But you will notice down below as well, where we have these MACD2 lines, this will help draw your eye to the fact of whether it has done a crossover or not, because this black line will cross up and through this pink 0 line here if those 2 moving averages cross one another. So it does look like right now, if we do get a bullish crossover on one of our charts first, it's looking to me like it's probably going to be the Dow Jones Industrial Average. I mentioned before that, with Boeing being as hot as it has, I think it was down today, but Boeing's stock price has really taken off here in the last several weeks. And you can see that that has an outsized effect on the Dow Jones because Boeing is a $405 stock, and the Dow Jones is a price-weighted index. So if Boeing can continue to be very strong, then you might very well see some follow-through with the Dow Jones Industrial Average to the upside as well. All right, let's go ahead and take a peek here at some of our 12-grid analysis. Let's start with 4E, which is our intermarket analysis 12-grid. Background colors of these charts will tell you whether we have a bullish or bearish posture using the market forecast intermediate term line. And as you can see, there's only 2 pink charts on the board. One of them is the VIX, and that makes sense. Remember, the VIX generally operates inversely from the general market. If the general market is strong, the VIX is usually weak, and vice versa. So that one's not all that surprising. The U.S. government bonds one here in the middle is a little bit more surprising because that price action does not look all that bad. It's trading above a rising moving average right now, and typically when you have a security trading above a rising moving average, you also have a bullish posture. But at this exact juncture in time, we do not, and so you're going to want to keep your eye on it. But I would say that if this chart does turn green here, let's say within the next few days, this could actually end up being an interesting bullish trade candidate to the upside because we're very close to hitting 3-month highs on that. You will notice that the U.S. dollar was up along with U.S. government bonds today. U.S. dollar was up 0.23%, and you'll notice that from a closing price perspective, we're at our highest level from a closing price perspective since going all the way back here to this candle, which was basically December 21st. Because you'll notice a lot of these other candles along the way were just a hair below where we finished today, which we closed at the high of the session here today. So you could also probably say that that is a little bit of a higher low that was formed right there in addition to that slightly higher high. So perhaps a trend change that we need to be aware of with the US dollar. And remember, that can affect our mindset with a lot of other securities out there. The US dollar is an important piece of the puzzle. And when the dollar gets stronger, usually foreign securities and commodities struggle on a relative basis. You'll notice that gold has continued to be in its series of higher highs and higher lows, and although it was down just a little bit here today, it remains above a rising moving average, so that's a promising sign there. But like I mentioned, the commodities are struggling in general right now. Remember, gold can sometimes represent kind of a safe haven asset. It's not always viewed as purely a commodity. But if you look at ag commodities, it was down 0.94% today. We also saw crude oil down 2.65% here today. And, you know, part of that may be due to the fact that the dollar was rising yet again. Now you'll notice that both of those background charts there are still green, so we haven't reverted back to a bearish posture quite yet. But if we do, you know, watch out down below, especially with ag commodities. Notice that we're already trading well below that moving average at this point. At least with crude oil, we're still above that moving average, so perhaps that'll provide a little bit of support. But I would say that the ag commodities chart here looks kind of ugly. So if you're looking for some bearish trade setups, perhaps ag commodities would be one to keep your eye on. Let's go ahead and take a peek now at our next chart. This will be 4F, and this will be our foreign stock markets chart. And here we've got all of them green except for one. We've got South Africa. South Africa now has a pink background, and it did not have that a couple of days ago, so that is somewhat new. And you will notice that the intermediate term line is at 79.54 and falling. So today would have likely been the first day that it had that bearish posture, because remember, anytime that reading is above 80, whether it's rising or falling, we do consider that to be a bullish posture. So now that it's just barely below 80, it's down at 79.54. In all likelihood, that just gave us our bearish posture today for the first time. But I'm not sure if I'm really quite ready to write off South Africa quite yet. You'll notice that we closed well off of the lows. So let me right click on this chart and go to maximize sell. And you'll notice that the low price was way down here on the candle, and we closed way up here. So the bulls were able to push this up, and remember, it could have been a lot worse, because had we closed at the lows of the session, we would have actually closed below that moving average. So by the bulls pushing that back up by the end of the day, we were able to maintain stance above that rising moving average there, which could allow for a little bit of support and perhaps, you know, some buyers coming into the market here reasonably soon. It's kind of interesting to note with this particular chart that we did have overbought cluster signals right there near the top of that move that we've had here recently as well. And as a reminder for those of you that are newer to looking at the market forecast, the cluster signals occur when we have all three of those colored lines in the upper reversal zone. So notice down here we had the green, the blue, and the red in the upper reversal zone on that day, and we had the green, the blue, and the red in the upper reversal zone on the follow-up day as well, which is why those two dots are plotted up there for our think scripts that we're using on this particular chart setup. It's just a way for us to quickly gauge whether other traders might be considering this to be overbought or oversold in some cases. So now that we've had a little bit of a reversion to the mean after seeing those overbought conditions, I will be very curious if it can kind of stabilize around this important level. Notice as well that where we're at here currently is kind of coincidental with these areas of resistance back here and back here. And a lot of times old resistance can become new support. So we'll see how that all plays out, but at least worth notating that there's some reason to think that the bulls could become a little bit more involved here on South Africa, despite it being down 1% today. All right, let's go ahead and have a chat now about our trade application example. And so I'm going to come on over here to, let's just do chart 4A. And the stock that I wanted to talk about is O'Reilly Automotive. And this is a stock that has actually been kind of popping up on my radar a couple of times here recently, but I was kind of waiting for a breakout of some sort, either up or down. I think if a lot of you are looking at this chart, you can probably recognize that there's a pretty steady pattern, sideways trading pattern, somewhere between, let's call it, I don't know, 360 or so, and then let's call it 330 on the downside. In fact, let's draw a couple lines on there to make it a little bit more obvious to you guys as well. So let's use this price level, and let's go with that, and let me right click, edit properties, and let's go with 360. And then let's do another one on the bottom. Let's see. And let's put that one at about 330 and hit OK. You guys can kind of see what I'm looking at there, where you have this well-established sideways pattern. Now, there's probably other important horizontal levels kind of in between here as well, but you can see at least a couple of obvious touch points right there, and right there up at 360. And then you saw a couple of obvious touch points down here and down here at about 330. So we've been kind of trading in this sideways channel here, as you can see, for the last 3 months. But today we did have some indication as to where this thing seems to want to go right now. Now, obviously, anything can change, but it is usually viewed as a positive sign when a company breaks out of a sideways channel, either up or down, with the expectation that the stock will continue in that particular direction. So we did see here today, after they did announce their earnings, that the stock managed to close higher today. Now notice we were actually up fairly substantially today with O'Reilly. It was up 3.35%. So it wasn't just a kind of a mediocre day, it was a big day. It was a big breakout day, big volume down below here, more than 1.5 times average volume. That's what that little black arrow in the volume candle is signifying. And the fact that we closed near the highs of this session tells us that that was very bullish volume as well, or at least that would be the assumption if price closed near the high. So what I thought we would do here today is a simple stock trade, playing that particular range that we saw right there. And the way that you typically will kind of measure your target price on a situation like this is measure the depth of that price channel. In this particular case, this sideways channel went from 360 to 330 or thereabouts. Remember, you don't measure this thing to the exact penny because people will see things a little bit differently. But generally, that was about a $30 wide range that it was trading in for the last 3 months. And so now that it's broken to the upside, one theory, one thought process would be that the new price target for this security could be up there at $390, right? Because that would be taking the $30 here in this range and adding it to the breakout spot there with the expectation that it's going to establish a new trading range going forward. So what I thought we would do is just buy some shares of stock here with about $390 as our upside target, and then also put a stop loss somewhere down here below the moving average, just in case we're flat out wrong, because remember that will happen quite regularly as traders, unfortunately. So we have to be prepared both sides of being both right and wrong. So let's go ahead and place that trade. I'm going to go ahead and just right click on the chart itself. I'm going to come down here to buy custom, and we're going to use this top function here called with OCO bracket. That loads up our trade down below. Now this is a more expensive stock, so obviously you need a position size based on your account value and different things like that. But for our purposes here in paper money, let's just do 50 shares instead of 100, just since this is a little bit of a higher price security. So you'll notice that since I clipped that little paper clip together there before changing the quantity, that after I hit enter, it did automatically change the quantity in the 2 lines directly below it as well. So the top line says plus 50, the next one minus 50, the next one minus 50. Now, because the stock market's closed right now, I have no idea what's going to happen first thing tomorrow morning. So what I guess I'll do at this point is I'll just put this in for $366. And I'm giving myself about 50 cents worth of flexibility here. Notice that the price that it closed at tonight was $365.46. So, you know, could this thing gap up 50 cents tomorrow? Sure, it's possible. If it does, then I'll be willing to just let it go and look for a different trade setup somewhere else. But assuming that the market opens up kind of normally, then I would expect that we would get filled first thing in the morning. Now on the second line there, or the first one in pink, that is going to tell us where we want to put our price target to the upside. So I'm going to put that at, let's call it $389.98. And that's about 30 bucks on top of the breakout zone at around $360. I am going to change that one from a day order till a good till cancel. The top line I can leave as a day order because now that it's after hours, that day order will take in effect tomorrow as its day. So I expect to get filled on that tomorrow. But the upside price target, of course, unless some sort of miracle happens, that thing's not going to go up $30 per share tomorrow. So I'm going to need that price target to be established using a good till cancel order. And while we're at it, directly below it where it says day, I'm going to change that one to good till cancel as well. That one's going to be associated with the stop. So in case we're wrong and we end up having to take a losing trade on that. So the very bottom line will actually allow us to tell the computer where do we want our stop loss placed. And if we're going to be doing a trade where we're getting in at approximately $366 and we're getting out at approximately $390, that's about a $24 differential. And in order to maintain kind of a 1-for-1 risk to reward ratio, what I'll do is I'll put our stop loss in on this one at, let's call it $342. And so that way we kind of have an even upside potential for the amount of money we have at risk to the downside with the stop loss. Okay, so with that out of the way, let me go ahead and click confirm and send, and we'll review this, make sure it's all looking as expected. And there's our 50 shares up there at the top. You can kind of see that it counts it out here for me as well. It says that the base is about $24 approximately above where the purchase would be made, and then on the sell stop part, it's minus 24. So that's kind of that 1-for-1 mentality that I was mentioning a moment ago. Again, keep in mind this is an expensive stock, so even 50 shares is going to cost us $18,000 here. All right, so let me go ahead and send that one in, and we'll see if we can get filled first thing in the morning. All right, well, I want to thank you for joining me here tonight. Remember, David will be back with you tomorrow, but this is my last chance to say have a great weekend since I won't be with you until next week. I will have that sector selector produced and available for you guys tomorrow night, so make sure you check that out as well. And I want you all to have a great weekend. Take care, everybody. Bye-bye.